Mortgage forbearance, another topic that we've had a lot of questions on. So what this is, right, is it does not erase what you owe your mortgage lender. So in the next 6 months to a year, I don't have to pay a mortgage, I get free money. That's not the case. You'll have to repay any missed payments in the future. Now, how that payment is made depends largely on how your loan was built. So know that in a mortgage loan, there's two entities that are a part of it. You have the mortgage servicer, right? So for myself, right, my home loan is through Home Point Financial. Sorry, brain fart there. Home Point Financial. That's my servicer. That's who I make the my check out to every single month. But they are not my producer or the people that back my loan. My loan is a VA loan, Veteran Affairs loan. So they're the institution that backs my loan. Home Point Financial is just the servicer. So you can always find out who backs your loan if you're unsure by calling the servicer. They're legally obligated to tell you how your loan is supported. So know that the mortgage forbearance is only for government-backed mortgages, right? So FHA, VA, USDA, Fannie Mae, Freddie Mac, or HUD. If you do not have a mortgage that is backed by the federal government, then you do not have a guarantee to mortgage forbearance. The CARES Act did not go into the private sector and say you must allow this. That being said, they highly encourage them to do so. And the military highly encourage means you're doing this. The banks don't necessarily follow the exact same suit. So if you don't have a federally backed loan, give your service provider a call and find out whether or not this applies to you. They may offer some type of loan. For people that are in this situation, realize that you cannot be foreclosed on for 60 days following March 18th, 2020. So if you are in that situation and your mortgage is federally backed, you cannot be foreclosed on 60 days following March 18th. That does not apply, okay, to people that do not have a federally backed loan. So always contact your service provider, find out what the process is. You have to call them to initiate this if you're looking for it. Some of the questions that we've been receiving from clients is, hey, should I go ahead and get this forbearance and then take that money and plug it into the market while the market's low, right? Theoretically, a great strategy. Realize this, though. You're going to have to prove to someone, the federal government, your mortgage service provider, why you needed mortgage forbearance. Don't know what that process will look like. I don't know that the banks have figured that out either, but that'd be the risk that you're trying to take in order to kind of come up with the system. If you can pay the mortgage, the government and everyone is trying to get you to continue to do so. But realize if you're trying to game the system, there's probably a loophole in there where you could apply for mortgage forbearance. Usually that mortgage forbearance is for 180 days. And then after that 180 days, you have to apply for another 180 days. What that process look like will really be up to the mortgage service provider, but realize that you're going to have to probably prove some way why you needed some type of forbearance for that loan. I don't know what that will look like. It'll be independent upon every bank, but realize that will be the hurdle if you're trying to use that strategy. Also know that property taxes and homeowners insurance and anything else that goes into escrow, that does not have forbearance. So if your mortgage payment's $3,000 a month, $2,000 goes towards the mortgage, $1,000 towards property taxes and homeowners insurance, realize that $1,000 will still need to be made. So don't think that it'll be your entire balance. Something to think about if you're trying to use that strategy. Key things to note. I think we already talked about most of this. You have to write it for up to 180 days. Then you have to apply for another 180 days. Contact your service requester for that forbearance. Interest is still going to accrue. How that will be paid back is kind of up to the individual service provider for those non-government backed mortgages. They may say, hey, your 3 months is up. I want a lump sum now that 3 months is up. They may just tack on to the end, kind of like the federal loans are doing. And essentially instead of having a 30-year mortgage, you've got a 33-year mortgage, or I guess a 31-year mortgage if you had a 1 year of mortgage forbearance. So it'll really be up to how that service provider dictates how you will pay that back. So some of the things, don't think that money is just free. Interest will still be accruing. It'll either be tacked on to the end. They could ask for it back in a lump sum, spread it out over the next 3 years. All of that will be situationally independently dependent. So don't know that gaming the system is the best option. But if you want to explore it, give us a call. We'll be happy to help kind of walk through any scenarios that you have.